It's all noise, right? After every halving, we tend to have this transition that I call from crypto spring to start of crypto summer. We usually get this sideways chop, and it's kind of normal. But this market is hilarious because everyone loses their minds, and they're like, "It's all over. It's the worst thing ever." Everyone gets chopped around, trading around in stupid shit they shouldn't be doing, and then just when everybody thinks it's never going to move again, it then explodes higher. So, I've been like you, just kind of wryly observing the psychology of this space. I mean, the psychology of this space is basically like
Today, we're diving into Real Vision's CEO and co-founder Raoul Pal's analysis of the current market cycle. Raoul compares the current situation to the initial phases of the altcoin phenomenon, in which other cryptocurrencies, or altcoins, begin to surpass Bitcoin in value. He thinks that this season is almost over, pointing out that in comparison to Bitcoin, altcoins like Ethereum performed the worst in the summer of 2020. Raoul argues that we are currently in the early stages of a new cycle, similar to that earlier time, with Bitcoin leading the initial rebound. He refers to this stage as crypto spring, and it is defined by Bitcoin's robust performance in conjunction with up-and-coming initiatives such as Solana. Raoul highlights his substantial investment in Solana and displays strong faith in its future, despite the general pessimistic opinion among other investors. He contends that over the course of the next 18 months, Solana and other cryptocurrencies are expected to surpass expectations, even if the market hasn't reached its lowest point. His belief that the market is approaching its bottom is the basis for this optimistic prediction. Come along as we examine Raoul Pal's thesis and his thoughts on Solana and Bitcoin.
imagine if we wind forward and before we know it, there's more financial assets going on to ETH because you don't get fired for using ETH, right? So let's say more financial assets, and they could be on a layer two, but it still starts to accrue value because financial assets are rapid velocity and high volumes. That narrative can switch so fast because the meme coin narrative is just a bunch of us who live in crypto land as natives. But really the thing that will drive this space is new capital into the applications layer of what this technology does. That's but I don't see it yet. Like you're saying, it's like, why bother? I kind of agree right now. We just don't know. All I do know is once you get to network adoption with some real applications, it tends to stick. So, if you think of all of the other big layer ones that came out in the past, none of those go to all-time highs again because they never got the network activity really. So Solana's clearly proven product market fit. When we abstract away everything from the space, these are businesses that are commonly owned that sell block space. That's all they do. And Solana sells good block space for various use cases. ETH and Bitcoin the same. So does it become boomer or does it matter? I think we need to be careful not to impose how the space is today, which is generally still retail driven and narrative driven versus use case driven, which I think will develop over time, which is like who's actually building, if Disney are building their Web3 architecture on XYZ, it's going to make a difference. It's going to bring in millions more, tens of millions of wallets and tens of millions of dollars of new activity every day. We just don't know what that is yet, but it will shift around. What I do to help me with this, to stop getting into that trap, is I just look at the cross rates of the charts, like on the weekly chart basis, and just if something is breaking out versus ETH or Bitcoin, and it's got something going on, it's very interesting, and that tends to be persistent over a cycle. So I'm looking now at what is the next big trade, because the next big trade is the Solana of the previous cycle, and it's going to be whether it's Monad, whether it's SWI, whether it's Celestia, or what. I have no fucking clue. But what I'm doing is, on my trading view, is putting all these charts versus Solana, because I ain't going to switch any money unless I can prove that it's going to outperform Solana. Like I look at the WIF Solana chart, and WIF outperforms Solana, so I don't mind a bit of that, but it's higher risk. So I just put one versus the other on everything. It's all noise, right? After every halving, we tend to have this transition that I call from crypto spring to start of crypto summer. We usually get this sideways chop, and it's kind of normal. But this market is hilarious because everyone loses their minds, and they're like, "It's all over. It's the worst thing ever." Everyone gets chopped around, trading around in stupid shit they shouldn't be doing, and then just when everybody thinks it's never going to move again, it then explodes higher. So, I've been like you, just kind of wryly observing the psychology of this space. I mean, the psychology of the space is basically like an 11-year-old. And when you play through all of this and you ask people their deep-seated fears, everything's going to crash, or China's going to invade Taiwan, or the Chinese currency is going to devalue, or what's happening in Japan. When you play through all of these, the outcome for all of those is more liquidity. Every single one. The only time it's not more liquidity is when the Fed are tightening, as are the other central banks, and they're purposely withdrawing liquidity. Everything else leads to more cowbell. And I just keep that in the back of my mind when everybody starts freaking out. But if China invaded Taiwan tomorrow, it would be the largest injection of liquidity in all history. The other way to think through this, I wrote about it in GMI, which I flicked to you guys last week or early in the week, was that when you look at what happened to the commercial real estate, you look at Credit Suisse, you look at the yen, you look at the Chinese, there's one big story there, which is there's a shortage of dollars, and it just keeps moving around. And then you see Yellen going to China twice. There's a trade. She's the biggest bond salesman in the world. She's now bigger a bond salesman than Mike Milken ever was. So her job is to sell bonds. She needs to go to China and say, listen, guys, can you buy our bonds? And they're going to say, yeah, but to buy your bonds, we need some dollars, because we're fucked, because we've got debt deflation going on and all our property developers are in debt dollars. So somewhere within there, and they're using Japan as like the threat. Look what's happening to their currency. It's going to happen to you too. Japan actually needs dollars too. So I just think there's a dollar injection of liquidity that's coming to solve this, because if not, China doesn't buy US goods. It's that whole kind of circular world trade thing. So,
in his discussion of the major problems confronting the global financial system, Raoul Pal draws attention to the severe lack of US dollars and its far-reaching effects. He notes that this dollar scarcity is having an impact on a number of industries, such as commercial real estate, credit markets, and currencies like the Japanese yen. China's economy is also greatly impacted by this issue. Pal warns China by using Japan as an example of a nation dealing with currency problems and a need for US money. According to him, China is under more pressure because of the possible consequences of a weaker currency, which is comparable to what happened to Japan. In order to solve this deficit, Pal believes that the global financial system will get a substantial infusion of US dollars. He contends that the global trade system may be severely disrupted if China were unable to buy US goods, which is why this involvement is so important.
Janet's rebuilt the TGA. Her job is now to spend it. Normally, after she's rebuilt it from tax season, there's like a $250 billion drawdown, right? That's whoopee, considering that Powell has reduced QT enormously from 65 billion to 25 billion. So Fed net liquidity goes up. The ECB are going to cut. They've made it really clear they're going to cut as fast as possible, and the Fed will cut at some point, or at least the markets will start pricing it. Then we've got the election. We've already seen Biden talking about just, yet again giving out money. We've got the Chinese talking about buying $40 billion of housing inventory. It's like you can't ask for a better setup. You've got institutions who want to buy, and liquidity coming into the system, and then you've got speculative fervor going on because of meme coins. It's like that's a perfect supermassive black hole to suck everybody in. I love observing stuff, and I've seen the Real Vision Collective, which is NFT driven. That's a community that loves being part of the community. They're super active everywhere, and then they together launched this "Don't Fuck This Up" token. There's something around the organization of communities and creating a digital currency around it that I've always talked about, this kind of digital nation state idea, that we're seeing something nascent here forming. Now, they won't all work, but somebody's going to crack this. Obviously, Yuga tried it with the ape coin, but they're kind of, Yuga land kind of fell apart for a while. Now, whether they get it back together or not, different matter, but it's close. There's somewhere somebody's going to crack this. I'm a citizen, my passport is my NFT, it's my digital ID, here's my system of currency of which we operate towards in our community. That's kind of interesting. I do much like I do with the crypto market overall, is I leave the early stage stuff to others because it's hard, right? Because you really have to I just don't have the attention span to be able to deal with it. So then I just wait for something that feels like a breakout and, whiff, bonk, and you think, whatever level you get them at, $1 billion, can they go to 100 billion? Yeah, in a stupid market, 50 billion, 30 billion. I'll take a 30x. And I feel like I've de-risked it. Well, somebody else will make much bigger returns, but will take a lot more risk doing it. So I just feel like de-risking it's actually easier. Maybe it's less fun for sure, but it's just, if I'm trying to make money, then I feel like de-risking it's the way. Look, obviously I sit on the SUI Foundation, but coming at it from a independent observer, it's got great technology, it's got stuff, it hasn't got a full narrative yet. The price is not outperforming Solana yet. So it's as simple as that. You can listen to me all day and I can say, oh, it's the most amazing thing ever. It's going to be the new Solana. Show me the price action. I think that we will see this later on in the cycle. I think it'll be one of the chosen ones, like it was AVAX, Luna, Polygon, and Solana last time around. There's going to be 4 or 5 of these that'll all explode. My guess is probably in that pack, but let's see. Let price show us the way.
In his concluding remarks, Raoul Pal provides an in-depth review of the state of the economy today and its prospects for growth. He lists a number of important elements, the first of which is Janet Yellen's involvement in the rebuilding of the Treasury General Account, TGA, which will result in higher expenditure. Jerome Powell, the chair of the Federal Reserve, will ease the way for this expenditure by reducing quantitative tightening, QT, which will increase financial system liquidity. Powell also talks on the European Central Bank's plans to quickly lower interest rates and whether or not the Federal Reserve would follow suit or be influenced by market pricing. He draws attention to political elements like China's intentions to make significant investments in housing infrastructure and President Biden's propensity for more stimulus measures. According to Powell, these changes are fostering the perfect atmosphere for market speculation, especially in the sphere of cryptocurrencies where groups such as the Real Vision Collective and the rise of meme coins are driving the activity. He talks about the possibility of community-linked digital currencies and imagines a time when NFTs would serve as a symbol of identification and citizenship. In terms of investing approach, Powell acknowledges that he prefers to enter markets at breakthrough moments and leaves early-stage chances to others because of their intricacy. While companies like Solana and Avalanche have shown tremendous development, he notes that their stories and pricing strategies will ultimately decide their success in the market. He also highlights the need of risk management. Until next time, happy investing.